The Fed expects banking crisis to cause a recession this year, the minutes show. And this is really the big thing that was picked up from the minutes. And we're going to talk about this here in this video and go over everything you guys need to know here on the markets today, how markets are reacting to the Fed minutes that just came out at 2 p.m., or I should say within the last 45 minutes or so, and go over an end of the day update on AMC stock. Hit the like button and subscribe to the channel, ladies and gentlemen. If this is your first time to the channel, consider sticking around a while. If you guys also want to come trade with me live in real time, link down below in the description of this video as well. And I think that is the first time ever the camera has died mid video or during the intro. But nonetheless, let's continue on. So the key points right here says fallout from the U.S. banking crisis is likely to hit the economy into a recession later this year, according to the Federal Reserve documents released Wednesday. Federal Reserve staff gave FOMC members a presentation about potential repercussions from the failure of Silicon Valley Bank and other tumult in the financial sector that began in early March. Though Vice Chair for Supervision Michael Barr said the banking sector is sound and resilient, staff economists said the economy will take a hit. And if we go ahead and skip down to this, it says, quote, given their assessment of the potential economic effects of the recent banking sector developments, the staff's projection at the time of the March meeting included a mild recession starting this year with a recovery over the subsequent 2 years, the meeting summary stated. So the Fed now expects this to be a pretty long recession. 2 years would be a very long recession. As far as history goes, a lot of recessions are on average about 6 months or 6 quarters or so. They would be forecasting here about a 8-quarter recession. So you are expecting a lot of economic pain to actually come out because of this banking crisis. And that's really the big thing that came out of this. The Fed has not really acknowledged that their base case so far was for a recession, and that's now what they are saying. And that's really the big thing markets are pulling out of the FOMC minutes. Markets have been selling off ever since that did come out. You're getting a little bounce here, but heading into the last hour or so of trading, it looks like things could get a little bit worse from here if I were to forecast. Now, you've also seen that inflation dropped more than expectations on the headline CPI, coming in at 0.1% month over month. That's 1.2% annualized. That's very good. Headline CPI came in at 5%, but core inflation came in at a month over month rate at positive 0.4%. That is 4.8% on an annualized basis. That is a negative thing, a very negative thing. And headline CPI came in at 5.6%. Again, a very negative thing. So for the first time in a long time, since January of 2021, you're actually getting core CPI that is higher than headline CPI. And what this really boils down to, and what this says, is that food and energy were really driving CPI lower. That core, when you take out food and energy, inflation looks a lot less conquered. So while some people are saying this is a victory here today on inflation, the markets are getting it wrong here. This is not. This is a complete failure on the front of inflation. And as more people digest this information and go over this inflation report, it will become more and more clear that inflation is not going away. And it's becoming a lot stickier, and it's probably going to be around a lot longer than what we were hoping for. So those are really the two big pieces of economic data that we got today. Like I said, FOMC minutes just came out as of the last 45 minutes to an hour ago. So you guys definitely want to watch that, because it's going to be a developing story as more people start to hear about this, as you get more digestion of this. Again, the Fed now expecting a 2-year-long recession because of this banking crisis, and again, inflation staying higher for longer. likely to get some economic pain to come. Now, trading economics. The lineup for tomorrow's economic data is going to be PPI month over month for the month of March, coming in tomorrow at 8:30 in the morning. That is Producer Price Index. That stands for essentially producer price inflation. Now, last month's reading was negative 0.1%, very positive. This reading that we're expecting is a positive 0.1%. So going from, deflation back into inflationary territory, even though, 0.1% is 1.2% annualized, not a big deal. If it comes in higher than that, markets are probably not going to like that. You're also going to get PPI year over year. The headline number last month came in at 4.6%. You're expecting 3.2% for this reading. So a pretty sharp drop there, as well as initial jobless claims coming out at 2:30 or coming out at 8:30 a.m. as well. You're expecting 234,000. If this number comes in at like 300,000, 350,000, yeah, that's where you're going to get a reaction off of that. I don't really expect that to be a big deal, really at all. You do get the Bank of England Phil that does speak, and a couple bond auctions as well to watch throughout the day, but nothing too crazy after 8:30 in the morning. Now, Friday, you're going to get those retail sales numbers, Fed Waller, as well as Michigan consumer expectations. Specifically, inflation will be important there, but that's what you have so far here on the day, and that's what you have for tomorrow. Markets still very firmly pricing in a rate hike coming on May 3rd, 67% chance to be more specific. Now, markets are still expecting rate cuts, even though, some of the inflation data that we're getting is not looking so hot. Markets are still stuck in their ways as far as, pricing in those cuts. Now, switching gears here for AMC and looking at the option expiration for this Friday, 65,508 calls are currently in the money, and about 95,000 calls that are out of the money. 22,000 puts in the money and 131,000 puts that are out of the money. So some pretty bullish option activity that you are seeing there. AMC stock is having a very strong day, currently up about 4% at the time of recording this video. And you do have about $705 million worth of short positions in AMC, an estimated short interest on free float at 25.13%, free float out on loan at about 39%, 201 million shares that are currently out on loan, with the days cover at about 5.5. Now, if we take a look at the cost to borrow rates right here, cost to borrow max 900%, cost to borrow average 621%, cost to borrow minimum, it says about 1%, probably around 400%. Those are the real last updates that we did get. Now, Interactive Broker short availability of 150,000 shares that are currently available to be lent out, with a cost to borrow rate of 735.33%. So some insane cost to borrow numbers that you were seeing over here, and this is leading to the possibility of seeing a short squeeze very much ramping up from now until April 27th, because if you look at the option activity, it's so bearish for April 21st, and even more so for April 28th. The total open interest of calls sitting at 12.94%. Total open interest of puts sitting at 87%. It's not going to take a lot of hedging or a more normalization of the option curve here, right? For the expiration of April 28th to get you a rally from here. Everyone is expecting AMC to fall. If it does not fall as much, or you start to get people that change their mind on that, start to think maybe AMC does rally after April 27th, well, you're going to be bullish from now until April 27th. So there you have that. A quick look at the technicals as well. You're still well above the 50 and the 100-day moving averages. I shouldn't say well above, but substantially above. 100-day moving average at $5.54 per share. AMC is at $5.63 per share right now. Longer you stay above this, the better. It's probably going to serve as a major support level as of right now. So I do expect some bobbing here until you do get that ultimate breakout. So, ladies and gentlemen, that is it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video. Thank you for watching, and I will see you in the next one.